You're listening to AI Prism from Seoul Economic Daily.
It's Friday, May 8. I'd like to share some thoughts about retail investors. To start this deep dive, we need to look at the KOSPI because it just hit this massive record of 7,490.
Yeah, it's a huge milestone.
Right, but under the surface, foreign investors just dumped 7.15 trillion won. That's about $5 billion in a single day.
It is a glaring contradiction, especially when you look at the broader data.
Right, because today we really want to unpack why you, the retail investor, might be left holding the bag and, absorbing that risk.
Well, Citigroup's actually just raised its 12-month KOSPI target to 8,500. They're pointing to two specific drivers for this. First, the memory semiconductor cycle is rebounding since global AI demand is clearing out old inventory.
Okay, and the second?
The second is the government's Value Up program. It's finally starting to show teeth, essentially pressuring undervalued Korean companies to stop hoarding cash and actually return capital to shareholders.
Through, dividends and buybacks, right? So, the fundamentals for a bull run are clearly there. Which brings us back to the $5 billion question.
Right.
If the runway is clear for tech and governance is improving, why are institutional foreign investors aggressively selling right now?
Well, institutional money operates on very strict risk management models.
Yeah.
When indices hit all-time highs, fueled by retail momentum, foreign institutions use that liquidity to lock in their gains.
Oh, so they aren't necessarily predicting a market crash.
No, they're just rebalancing portfolios. They're taking profits off the table at a market peak.
Yeah.
And they can exit so cleanly because domestic retail investors eagerly snapped up nearly 6 trillion won in shares on the exact other side of those trades.
Wow, that is a massive transfer of risk directly to individuals.
It really is.
Let's look at what actually happens to the economy when retail investors end up making a profit on these trades. Because the Bank of Korea just released a report detailing a surprisingly muted wealth effect.
Yeah, the contrast is stark.
It is. The analogy they used was if a U.S. consumer makes $7 in the stock market, they tend to spend about 25 cents of that on, extra consumption, a coffee upgrade or something.
But a Korean investor, they spend only 9 cents. That's just 131 spent for every 10,000 won earned.
Wait, just 9 cents?
Yeah. It's about 1/3 of the U.S. or European norm. Part of the structural reason is baseline exposure. Korean household stock assets only equal about 77% of disposable income, compared to, 256% in the U.S.
Right. A huge gap. But there's a psychological factor here, too, isn't there?
A massive one. The Bank of Korea estimates that for a Korean household without a home, roughly 70% of their stock gains are hoarded specifically for real estate purchases.
Wait, really? But with Korean real estate prices currently stagnating or even dropping in some areas, why is property still the default safe haven?
Because the structural mindset just hasn't shifted. Equities are still widely treated as highly volatile temporary windfalls.
And you don't use temporary windfalls to permanently increase your daily standard of living.
Exactly. You use them to build a down payment for property, which is still viewed as the primary vehicle for generational wealth. That fundamental hoarding behavior severely dampens the broader economic impact of this entire KOSPI rally.
So because retail capital treats the stock market like this high-speed savings vehicle for real estate, they're chasing high-yield thematic ETFs to get there faster.
They are. And regulators are noticing. The Financial Supervisory Service is stepping in because asset managers are exploiting that urgency with misleading marketing.
Right, which means as an investor, you have to be super risk-aware right now. Look at Hana Asset Management. They marketed a new ETF by leaning heavily on its SpaceX exposure to attract retail capital.
But their actual direct holding in SpaceX was zero.
A zero.
Yeah, they held a 0.3% indirect stake through another U.S. ETF.
It's like buying a premium ticket to a concert, and when you show up, you find out your ticket only gives you access to a live stream playing on a TV in the parking lot. You aren't actually in the room.
That's exactly what it feels like. Or look at what Shinhan was cited for. They artificially combined the weights of SK Hynix and SK Square in their promotional materials.
So to a retail investor just skimming a brochure, it looked like massive concentrated exposure to the AI memory chip boom.
Exactly. When in reality, the capital was diluted across different corporate entities. This crackdown by the FSS is a clear signal that the ETF market in Korea has grown too fast for its own good. It forces you to rigorously check the actual prospectuses, not just the marketing sheets.
Definitely an important takeaway for your portfolio.
And beyond what's in your portfolio, there is a macroeconomic event you should watch next week. The Bank of Korea's Monetary Policy Committee meets on May 28th.
Okay, so what should we be looking out for there?
Well, if they signal a potential rate hike to combat inflation, mortgage rates will tick up. You have to wonder how that will alter this incredibly delicate balance. Like, will retail investors keep fueling this KOSPI buying frenzy? Or will higher borrowing costs force them to pivot even harder into saving for real estate?
That's today's AI Prism, Retail Investors. This episode was produced with AI assistance based on Seoul Economic Daily Reporting and reviewed by a human editor. AI Prism is a Juan Imafroy award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.